Let's get in our big fundamental voice of the day. Vikas Khemani, founder at Carnelian Capital Advisors, joins us right now on the show. Vikas, thank you so much. Appreciate you joining us on such a short notice. But just wondering whether the markets will, or what's your sense of what happens in the intermediate period of volatility, and how do we navigate through that?
Hi Neeraj, it's a pleasure to be on the show with you. I think we are in that phase of the market where we have sort of somewhat good news, somewhat bad news, and I think whenever these kind of things are there, you will find volatility being very high. Of course, political front, I think the worry seems to be settling down, but the results are not yet out. So we are in that phase of 1 month period where you will see different permutations, combinations playing out, and I think to make matter a little more worrisome, I think the oil prices rise has kind of added a bit of worry. So I think this kind of situation will always be kind of bringing volatility, but by and large I feel that directionally, if I were to look at from medium term to longer term perspective, things are under control, things are looking incrementally better. Once I think the political outcome is there, the new government is in place, there will be direction. Globally, I think scenario is turning to be in favor of India. A mild slowdown in the growth is a good scenario for India. Locally, I think we will see after this event in couple of quarters, the earnings going to start picking up. Inflation is under control. Of course, we have to watch out oil, how it gets. I think oil is probably a temporary situation. We are not seeing it getting out of hand in a big way, but that's a one big risk, open risk, which we have to constantly keep a watch. You can never be sort of complacent about it. And I think so directionally, I would say one should keep in mind that India is well placed from medium term to long term perspective. But any such kind of volatility happens, one should use these as an opportunity to kind of build the portfolio. And I would say in this period, one should avoid leverage, because I think when these kind of significant events are around you, you should always be a bit wiser, because market movement tends to be pretty sharp and at times short-lived as well. So that's one approach, but medium term to long term perspective, directionally from macro fundamental perspective, is reasonably falling into place in the right direction.
Do you see any big spanner in the works for this rally, or no? Because you might just have periods where you have these air pockets in the market, looks a bit turbulent, but then it comes back to reverting to mean, and the overall trend, like you said, continues to remain more positive.
So as I said, that I think directionally we are quite positive. I don't see too much of worry. Of course, I would love to see a lot more pickup on the demand and the ground level, and I think that will take some time. In my opinion, it is not bad, but I think that it can be a lot more better than what it is today. And we have seen in last 3 years time and again, 1 or 2 shocks keep coming, and that has kind of impacted the demand scenario. So I think, and it takes time for it to recover. And we will see that, but at the same time, I believe that directionally it's positive, and these kind of corrections should be looked at as an opportunity. We will see this kind of reversion. I don't believe that markets are overly expensive. Of course, you have to look at the investable pockets. You cannot look at market with a broad brush, but investable pockets you will find interesting place to kind of look at it, and that's how I look at market at this point in time.
From an earnings standpoint, Vikas, we are already into Q4 now, and slowly but steadily we are getting earnings trickling in. For the end of the year, what would you say would be a reasonable earnings projection? And starting off FY20, that's when most of the consensus opinion comes in with regards to earnings growth, probably even trying to nudge about 18-19%.
So yes, I think 18-19 could have been better, but for ILFS or credit crisis which hit India, and I think that had a severe impact across the sectors, and also along with that there was a foreign exchange volatility as well. So both of the put together had impact across industries. I mean, you can't probably look at any industry which did not get impacted. I'm assuming that, I think, and it will still take time to settle down as the credit picks up in the system and the currency settles down. The Q1 also, in my opinion, one should not expect a broad-based rally. I think Q2, Q3 onwards, you will start seeing pick up in the earnings in a slightly broader based manner. Having said that, we already seen some of the banks results which has come out, I think, doing pretty well. IT companies are doing all right. So I think and auto companies, I feel, will start once the inventory gets cleared, you'll start seeing picking. So I think it would be good to assume that a 1920 unless some another shock comes, which we cannot foresee today, it's good to assume that at least 15 to 20% kind of earnings growth quite visible and possible in 1920.
Because we haven't had too many banking names come out thus far, but two mid-sized banks, one HDFC bank come out with numbers. The expectation is that this quarter will be that quarter where we'll finally see banks at large deliver growth. Corporate-facing banks will do that, and some of the private sector banks would continue on the merry ways. HDFC Bank is a prime example there. What's your stance here? Fairly owned and fairly valued, or do you believe because of the upcoming beta or the alpha in growth numbers that will come in, or the delta in growth numbers that will come in, is it worthwhile to take a fresh look at some of the financials?
Oh, I have no doubt in my mind, Neeraj, that this market rally will be led and sustained by the financials, and banks form a very big part of that basket. And also, let's not forget that banks still provide large part of the credit to the economy, and without credit growth, we don't have a growth in the economy. So you will see, and we have had fairly large long period of stagnancy, and also more importantly, PSUs are ceding market share to the private banks slowly and steadily. Now, two things to play here. One is, I think you have to look at the banks like HDFC or IndusInd, which have been delivering reasonably good, less corporate focused, more retail focused, have been giving reasonably good growth. I think there you could see a little bit of acceleration, but at least continuity of the same growth profile, because they are reasonably valued as well. So you can capture earnings growth equivalent returns in your portfolio. Second basket, which is very important, is I think the corporate facing banks such as ICICI Bank, Axis, and some more, which have been kind of suffering from a fairly large hit on their profitability because of the NPA cycle, and also mindset of the bank has been kind of less growth focused because of their energy being diverted on asset recovery. I think that is changing and almost set to change, and some of these banks will not only deliver good and superior earnings growth but also get re-rated, and hence I think you will capture better return, or total return would be far better than some of the other banks which I mentioned. So I think an idea is to, in my opinion here, the PE re-rating and growth will be far more pronounced in this basket. So I think and what we have seen, I mean, the stocks have done well, but still I think long way to go. So one should not look at only a short-term performance and say that it is looking stretch. I think there are long kind of period is ahead of us where you will see earnings growth, ROE profile improving, and a lot more returns coming from. So I would say remain invested. Don't worry about short-term up or down move in the stock prices. If it goes down and if you are underinvested, that opportunity to buy, because over the next 4 or 5 years, banks are much better placed than any other setup in BFSI space, and also BFSI is a fairly wide basket, so you can look at other opportunities. But I would say remain invested. Sector is long way to go.
Just a brief mention on Z Entertainment. It's up 3.5%. Now, two ways to look at it. One is the market reading into SL Propack sale and trying to extrapolate that to Z may be able to do that. Now, we've kind of unequivocally told that, and the promoter has said that that's not the case. The other bit is Macquarie's come out with a note on Z Entertainment. They've taken cues from the Economic Times interview from Subhash Chandra, wherein he mentioned that the term sheets could come in as early as April last week, May first week, and maybe brokerage is taking cognizance of that. Could be the other reason why Z Entertainment is doing what it is doing, because it's the best performing stock on the index right now, 4% higher.
I think 3 to 4 interesting
parties. Yes. And he said there could be PE players as well.
Yeah, and not necessarily Indian players, and ranging from India to Japan, he said. So
yeah.
There is a possibility of an outsider coming in too.
It's up 5%, Devina, as we speak. Just wanting to make sure to at least our set of viewers that the SL Propack deal has no connection to Z Entertainment and its problems. This could well be Subhash Chandra saying that the deal is happening very, very shortly. Vikas, any thoughts on this group, the issues that they've faced? Now the promoter group saying that a deal is imminent, at least the term sheets could come in as early as the first week of May, even if the deal gets consummated by September 30, the deadline that they've signed with the asset management companies.
So I think Z Group per se is a very good group. We have seen how over the years it has created wealth for shareholders. Of course, Z Entertainment is a great company and has done very well, but promoters got into infrastructure, used the borrowings against G shares, and I think infrastructure. I think most players have been, especially who are in asset ownership space, have sort of suffered and losses. So I think and promoters are paying price for that business call. But as having said that, I think a good part is that at least they have a good, family jewel. Using that, they could settle some of the liabilities which we are kind of seeing in the marketplace. So I would assume that I think once the transaction is done, this thing should be behind, and it's a credible group. So and Subhash Chandra has put his personal credibility online, saying that he will make sure that every penny is repaid. So and it's very important that at this point in time it is done, because in the entire mutual fund industry is looking for this kind of development. So I do believe that it should happen, and it's a good asset. It should go through. I mean, question would be price and control, which I'm sure I have no idea, but promoters would resolve it amicably.
All right, because while we've spoken about all the consensus ideas, where there is a consensus on financials doing well, there is a consensus on some consumption names doing well, is there a contrarian view at all that you have? I mean, we've been seeing autos being a contrarian call, but that has started to play out over the last 1 month. But is there anything in the works that you see as being a contrarian call, which the markets have probably shunned as of now, but could take the fore in some time to come?
So one sector we are watching very closely, we haven't made our mind yet, but I think could be time to look at, is telecom. Industry has consolidated. There are only 3 players. Jio has, I think, reached a critical mass. So probably some point in time, increasing ARPU might play out, and being a very high operating leverage game in play, I think some of the telecom players like Bharti might end up doing well. So we are still evaluating, but that's the one segment one should keep sectors one should keep a close watch on, because the moment it's a 3-player market, and I think some of the balance sheet is also getting repaired through rights issue. So once they are behind, you will see that one sector one should watch out very, very carefully. Still, it is not very sure whether timing wise it's whether it should be done now or 6 months later or 9 months later. But I think worth watching, because it's a large sector, and you have 2 large cap companies in that name, so one could look at, but watch out.